Hey guys, Beat Twice here. Happy freaking Monday. It was a great one for me. Hopefully, it was a good one for you. We're going to be going over some of these big ones I had today that I've been calling out for a little bit now, and then also look at SPY, QQQ, and IWM of where they could be going. So, we're going to start off with Disney. Disney, I've been screaming about as soon as it broke out of this bull flag down here, I actually got in, and then I doubled down as it was pulling back because I was just that high on what Disney could potentially be doing. Plus, I do think that they're going to beat earnings and rocket from there. Ultimately, it looks like we gapped up pretty big. Had a runner here today, so I saw this as our wave two bottom. Originally, I thought this was wave two bottom, and then ultimately, I thought this was wave two bottom. Once we went a little bit lower, and that's when I doubled down. So for the last couple of weeks, I've been talking about this. That at some point, Disney was going to rip, and it was going to happen so fast that you wouldn't even be able to get in if you weren't already in. So hopefully, you guys listened to the previous videos and you did get into Disney, because this is exactly what happened. There wasn't a whole lot of resistance outside of this flag, so it was very easy for it to run up, and that's exactly what I thought was going to happen. Where I saw this going was a price target of 191 before we hit an algo sell target. It was a little bit higher up until our wave two went a little bit deeper, but I see us going up into this 191 range. From there, we should see a pretty significant pullback back down to the low 180s, and then ultimately I see us going up towards 200. So what we saw today was actually we're in a wave three and we popped up for a one, a two. We were in this red wave three. So we pulled up for one, pulled back for two. And when you get in these wave three of threes, you can ultimately just rip. We popped up for this purple one. It's kind of hard to see. Let's see if I can get a better zoom in on it. So we popped up for this purple one, pulled back for a two, popped up for a purple three, pulled back for a four. And now we're going up for the purple five, which is also this red wave three. So we could go a little bit higher tomorrow, or we might just honestly, stop right here and then pull back a little bit, unless our wave three, that's this red wave three, ends up being a massive runner and takes us all the way up to the 190 range. If this sequence or this impulse does take us to the 190 range, then there's a chance that my orange wave 3 could actually be a 262% extension, which would be massive. So I've been taking profits on Disney, but I am letting some of the runners go because I've been in call options on this. Just ultimately, in case it does completely rip higher than what my actual price target was, then I can at least still grab some gains from that. So hopefully you guys were in Disney and got some wins on this one with me. Let's move on to XLF. All right, so XLF. XLF, I had a bull and bear count recently, but I was favoring the bull count. On Twitter, I actually called for a golden dip, not knowing that that was actually a legit term, but that it was a golden dip buy because I saw a three-wave move down. I actually got into call options for August, which anybody who's in options on XLF knows it's extremely cheap to buy options, and it's very easy to get gains because you can literally spend like 50 bucks on each option that are like a dollar away, just because obviously it was trading at like 36 a share, and it was a down day, making it even cheaper to get in. So ultimately, this did end up being bottom. What we're seeing right now is we're running up for a wave one. So I actually on Twitter earlier said that I took profits because I was up 150% on my call options. So I didn't close everything. I kept some open, but what I ended up doing was I rolled to some of them. I rolled out to um, a further strike just to realize some of those gains, and other ones I just completely closed out right now. I'm going to be looking for this drop down because right now we're going up for a wave one and we're going to pull back for a wave two, and then we're going to be in a wave three of this purple wave three. So we're going to completely rip. What I see happening is we might get a great dip buy opportunity here. Hopefully some bank earnings kind of tank, maybe tomorrow, and we'll see this thing pull back from 37 back to like maybe 36.50 or hopefully even 36. That'd be great. But hopefully we'll get a three-wave move down tomorrow if we're lucky, and we'll be able to buy in again and then ride this whole thing back up to the 38.50 range because this is going to be the big move. Today wasn't, or the last couple days, even though it ripped up, wasn't even the big move in my opinion. I think we're going to see an even bigger move that's going to take us to 38.50. From there, we'll have a slight retracement, and then from there, we're going to be going to 40. So I do still think all dips are buy in XLF. Just make sure you take profits accordingly because it is pretty easy to get some pretty quick gains. Okay, another reason why you want to be taking profits a lot in this market is obviously we could be close to a top, and if the S&P 500 tops or if the Nasdaq tops and all hell breaks loose, you don't want to be stuck watching all your gains evaporate. So be smart about that if you're trading options. All right, so Tesla, I've been screaming that I'm bullish and I want this thing to be going into the mid 700s. It looks like we're getting there. It looks like today was a rally back up to this downtrend line. We broke above it. Will we hold that? I don't know. I actually opened a little bit more hedge today, short term, just because what I see happening is that we're popped up for a one and that we could be flushing down for a two, which could be a big move to the downside, which I think is going to be a big bear trap if it happens. If it does happen, I'll be flipping my hedge, some of it, into more calls to ride this thing back up. Because what I see happening is I do think we're going to pull back down to maybe 670, 660, somewhere in that ballpark. It just depends on where we peak for this one. But I do think we'll peak somewhere around here and then we'll pull back a little bit. I think that's going to be a great dip buy opportunity. So if you're not already in Tesla and we do pull back to like 670, I would definitely go long and look for strikes around somewhere in the mid 700s. We possibly could even see maybe 850 or so by mid August. Just depends on what the earnings look like. If the earnings are terrible, this thing could tank. So yeah, kind of risky right here, but I do ultimately like it going up to the mid 700s, possibly even before earnings. All right, so let's take a look at SPY. Nothing much changed here. I changed how I drew my lines. I still see us going up to this 440 range, but I do think we're going to see a slight pullback probably tomorrow. We're at 437 right now. We could even go down to like 435, maybe a little bit lower. If it does happen and you want to play SPY, you could buy that dip because we should be going to 440 before we see a meaningful pullback. The meaningful pullback will be maybe like a percent or higher, and that should take us back down to maybe like 435 or lower, depending on how low we swing. And then that's going to be a great dip buy opportunity because then we're going to be going up to 450. Now, the longer this drags out, the higher this price target is going to be because ultimately I see our top being the next time we touch right around this trend line. So it could be 455. I don't know. It just depends on how drawn out it is. Maybe even we go a little bit above it, but it's going to be somewhere in this 450 range. So I do see this being a great dip opportunity. But if you're really hell bent on playing SPY, then I would say any dip is probably a good buy because these things have been getting bought up super fast. Okay, so QQQ, same thing as SPY, so I'm not going to go over it too much. I drew a little some lines because I do see us pulling back a tiny bit, and then from there I do see us ultimately ripping higher. I see us peaking somewhere around this 366 to 372 range, pretty much whenever the S&P 500 hits 440 is where wherever the Nasdaq stands at that point in time is likely where I think it's going to go down with the S&P 500, and then when the S&P 500 is rallying higher, it's going to rally higher as well. So this will be the great dip buy time here. But just like the S&P 500, dips are still buys here. You just want to be careful. All right, so IWM. I started doing a video on this yesterday, and I drew a funky ascending triangle that's not a technical Elliott wave theory ascending triangle. It's actually this formation in Elliott wave theory is actually a leading diagonal. After having some conversation with another guy on some YouTube comments yesterday, I drew the ascending triangle because I'm using technical analysis, not an Elliott wave theory ascending triangle. An Elliott wave theory ascending triangle would have to be an A, B, C, D, E move, and all of which would have to be touching the top flat line and the ascending down line. The reason I drew this on here is more or less just because I was trying to show that, hey, we're having higher lows, which is bullish, and eventually we should break this to the upside, hopefully, because this is a bullish formation. So with all that being said, let's actually look at the wave theory behind this of what I'm seeing. So what I'm seeing right now from today's perspective is actually we're running up for this. I didn't number these, but what I saw is a 1, 2, 3. We pulled back for 4. Since we didn't break the top of this peak here, we could technically still head lower. If we do head lower and we end up at this 223 range, I'll be buying weeklies looking for us to get to about 229, 230 because that will be our wave 4 bottom, I think. And then ultimately, I do think we'll go up there within the next few days. So once we do hit this 229 range, I'm going to be looking for a pullback. That pullback should take us down to maybe back to 223, 222, somewhere in this ballpark. So if you're not already in IWM at that point in time, I would buy that dip because from there we should be heading up to into the 230s. Ultimately, I do see us hitting this higher degree wave once somewhere around the ascending triangle top line of about 233, maybe a little higher if we can break above it, and then we'll have another pullback, and then that will be the best dip buy time because then we'll be in a true wave 3, and hopefully it'll be a ripper. So I am already in IWM, and hopefully we can get some gains off this one here in the near future. Now the last one we're going to look at before I go look at some other charts and put out a different video for those is AMD. So kind of like Disney, I keep screaming about AMD. I'm saying like, hey, dude, AMD's a great buy. I truthfully believe that. The reason I keep screaming about it is I think that we're going to be seeing 110 sometime after earnings. I think earnings call may dump us. So I do think that there's a good chance maybe we even hit these upper 90s before earnings, and then ultimately this big flush is going to come from earnings. Now remember, earnings is like in 2 weeks. Okay, it's on 7/27, so not a whole lot of time in between now and then. But what I think is going to happen is we're going to see a little bit more upside, probably to about the 92 range, maybe even a little less, 91.50 either way. But we're going to see a little bit more upside. That's a wave one. I didn't number it because I'm lazy. We're going to pull back for a two. We're going to pop up for a three. That's going to take us back to this resistance, the same resistance that this other wave three and this wave five happened. We're going to hit right around there, and we're going to pull back again. So people may think, oh crap, look at that. It's going to drop because it got rejected. No, that's going to be a bear trap, and that dip's going to be a buy because it's going to take us sending it. We're going to go send it up to about $100 a share. And then from there, obviously, we'll see a pullback. I talked about in the past, I don't like to short tech unless I'm hedging or unless I'm bearish. And right now I'm bullish, so I'm not going to short it. I don't usually play these because they could be shallow or they could be massive. Obviously, this one would have been a great one to short because it was huge. But you never know when it's going to be that or when it's going to be this little guy, or like when it's going to be this little guy. Like there's not a whole lot of gains if you're shorting this and you're only going down like a couple bucks. Like unless you're playing weeklies, you're not going to make a lot. So with that being said, AMD dips are a buy. If you can get in still around this 90 range, that's a great area to get in. I would say go long shares and just hold them. Don't even worry about scalping. If you're playing options, be smart around earnings, but we should be able to see a run up to the upper 90s by then. So, all right, guys, if you like these videos, go ahead and hit a like and subscribe.